when must taxes be paid on IRAs and employer-sponsored retirement funds?
Okay. Now you have the traditional IRA, and you also have employer-sponsored retirement funds. They are tax-deferred accounts, which means they're typically funded with pre-tax dollars. Those monies in which you get paid your salary, you set aside X number of dollars, and it's not taxed until you make a distribution from an employer-sponsored retirement account or an IRA. And usually those taxes, when you get the distribution, they're taxed as ordinary income.
Okay, because that was part of my next question, how withdrawals treated for tax purposes, but also, are there any exceptions to the rule?
Oh, there are some exceptions as well. Now, suppose you're under 59 and a half and you take a distribution from your employer-sponsored retirement account. Now, employer-sponsored retirement accounts, I'll describe some of them for you, Carolyn. They are TSPs, thrift savings plans, which a lot of federal employees have.
Yes.
The 403B, a lot of educators have that type of employer-sponsored retirement account. And you also will have the 401K, the private sector use that, and of course IRAs. Now, if there is a withdrawal from an employer-sponsored retirement account, well, you're subjected to a 20% withholding right off the bat. Now, suppose you're under 59 and a half.
Okay.
There's an additional 10%. And this applies to the IRA as well. So, of course, the taxation on, and I don't advocate using your employer-sponsored retirement accounts or your IRAs as an ATM machine.
Yes.
All righty. Now, here are the exceptions. You can have a Roth 401K.
Okay.
And you can also have a Roth 403B or Roth IRA. These funds are funded with after-tax dollars, and they're referred to as qualified distributions and subject to federal tax if you don't meet the 5-year rule. So there's a 5-year rule when you have a Roth. You pay your taxes up front. And if you're under 59 and a half, well, the distributions are all tax-free.